What is going on, YouTube, and what's going on to all the savvy investors out there? And before I kick this one off, guys, can you please follow me on Twitter at head of WSB? Okay, guys, Twitter is growing. Okay, now back to the topic at hand, guys. We are going to be talking about a few stocks we have been talking about recently, and we're going to go over Cara. Today, we saw a stock react. Yesterday, we saw a stock. Well, not yesterday, guys. Friday, of course. We saw a stock react to a FDA approval the same way Cara did, guys. Okay, so we're going to talk about that as well as a few other things, okay? So before I kick this one off, guys, don't forget, smash that like button. And if you're not a subscriber, you might want to do so, guys. Now, first stock we're going to take a look at here. And that is Clov is getting squeezed, up 28%. Man, guys, I don't consider what Clov is actually going through isn't a true squeeze. All right, guys. In fact, the short squeeze is the result of a short squeeze, guys, is like 700% gain in a day, maybe even more from a peak price. Okay. For instance, if AMC squeezed, it wouldn't be today just off of buying pressure. It'd be multiple days of the stock running up, resulting into the hedge funds having to close their position. Thus, the short squeeze happens. And that is when prices go outrageous. But currently, guys, I believe a short squeeze is close to a myth because me personally haven't saw a full-fledged short squeeze just yet. But the stock we're going to take a look at here, guys, Impl. Okay, guys. Now, guys, remember what happened with Cara after the FDA approval. Okay, guys, the same thing happened here. If we take a look here at the 1-minute chart, we look here at Friday for this stock. As you can see here, guys, happened just like Cara. Once the news came out on the stock, shot up in price majorly. This wasn't nothing but retail investors buying the stock up that rose it up like this, guys. This isn't institutions, okay? Now, where the institutions come into play, if we go back to this day chart, okay, guys, this was Friday was the day we heard the FDA approving their product. Now, after hearing that news, the same thing happened. We saw a sell-off, but guys, this is a different type of sell-off. In fact, if we look here at the analysis and check out the institutional holdings, guys, 86.72% owned by institutions. Now, get this. We check this date here. As you can see here, they were buying this stock, okay, throughout the whole first quarter. So if we look back at the quarter, let's look at this quarter. If we look at it at the quarter chart, as you can see here, these institutions were loading up and everything was counted for on June 30th. Okay, so that is where we see those high percentage numbers. So they were buying the stock between $6.90 and $15.89. Now, if we average that out, guys, we're going to say that they have an $11 price average. Now, by them having $11 price average, and to hear this news, now check this out. This is going to blow your mind, guys, and this is why they go after stocks like this. Because these type of stocks, such as Cara, this stock, guys, they are only being bought on speculation until the product actually comes out. Now, seeing as though that this stock did repeat a Cara, guys, that is a good sign for us. That is in Cara. Why? Because we see that the institutions did, in fact, shave some of their position, meaning those guys have taken some profit, but they didn't take it all out, guys. Not even close. Okay, and the reason why they did that, if we take a look here back at the day chart, as you can see here, guys, we're going to take a look at the 30th. Okay, The 30th, okay, and since the 30th, as you can see here, this stock has just been trading in a uptrend, okay, guys. Now, if they have an $11 cost average, okay, when we were up at $28 here, guys, which is the 9th, the following day, the institutions triggered another sell-off by shaving off some of their position, aka locking in some gains. They didn't do much, but by them holding most of the free float, okay, most of the free float, because we go back to the analysis, guys, the institutions here own 86.72% of the free float. Now, with that being said, when you control most of the shares, okay, guys, what's left in the free float, far as people buying it, is magnified. Okay, so anyone that is buying this stock, if you see here, guys, 151,000 shares was moved around on this day, and it went up over 16%. Okay, so with that being said, guys, as you can see, by them controlling most of the shares here, anytime that a retail investor or we start to see a lot of retail order flows coming into the stock, that in fact magnifies the potential that the stock will be rising on due to the buying. Okay, so with that being said, guys, seeing that this thing sold off after hearing and this was the day that they announced the date of the earnings. Okay, and to see this thing fall 25.87% just only on 209 shares trading alone. And the reason why you see that, guys, is because remember, the free float here was less than 3 million. It was around 2.7 million shares. Okay, so 200,000 shares does pack a punch. Okay, when it's that low of a free float, guys. Now, when that occurred, that triggered us retail investors to trade off emotion and start to sell the stock. Now, on the 17th, no, the 16th, guys, is when they came out, and we heard that the earnings were just terrible. Terrible, terrible earnings. Now, with the earnings being terrible, right after that is where we started to see a climb in price. Very brief. Now, on the 19th, this candle we see here, guys, we saw some insider buying. Okay, the president of this company, in fact, bought, I'm going to say, around 20,000 shares. If I'm wrong on that, guys, correct me. Around 20,000 shares on this day. Now, again, what the institution's going to do, this guy buys the stock, which makes it a catalyst. People start buying it off speculation because everyone knows here that the FDA approval is coming up. So everyone see this guy buy the stock, everyone jumps in, okay? And the institutions do it again, guys. They shave off some of their positions, lock in some gains, and causes the stock price to go down. But the reason why they are not closing out completely is due to the fact that these stocks does have a lot more of catalysts ahead of it. Even though that the FDA approved its product, these institutional investors, guys, they're betting big on the earnings after the product is released. So, for instance, Cara is their product that just got approved by the FDA. Now, that is going to be being sold during Q1 of 2022. Now, a lot of the big investors are going to stick around until they wait and hear how well did it do. So once we hear that Q2, once we hear the earnings call for Q1 2022, if it's good for Cara, guys, if it's good, then you will see these hedge funds add to their position. Okay, guys, that is the big player for these hedge funds / institutions. These institutions wait until the earnings come out. That is what they are mostly bullish on. So the FDA approval, them just shaving, let's say they shaved off 20% of their position, okay? With this seeing so many not analysts, guys, I'm all over the place. With this seeing so many institutions, because if we look right here, guys, let me compare this with Cara. This is going to blow your mind, guys. Anyone that is concerned about Cara and what is going on with it, I'm feeling good due to the fact that the institutions didn't close out their positions completely. Why? Because they know what's coming up. They're waiting to hear how well did Kursova sell when it hit the market. Okay, that is what they're waiting for. And if it's good news, this thing is going to move. But if we look here back at the institutional holdings for Cara, guys, as you can see here, this as well has a lot of institutional ownership. So when Cara, let me drop this a little bit, guys. So Cara's on the right of the screen. So when Cara heard its FDA approval, it got approved. These institutions do what they do best, guys, lock in some gains. Okay, now that was obvious that was going to happen. So when you're dealing with any of these stocks, guys, if it has a lot of institutions in it and they hold most of the outstanding shares, expect them to have a lot of sway in the market. Why? Because by them holding their shares to their chest, if you go buy 1,000 shares of Cara, you will bump up the price due to the fact that the free float is so small, guys. So if you go out, you can really do damage to a stock. If the free float is small and most of the outstanding shares is being held, okay? If most of the outstanding shares are being held by let's say, a whole bunch of retail investors, that is kind of iffy because people tend to sell at the wrong time. But as you can see here, these institutions know what they're doing, guys. And the reason why they go after these speculation stocks, because if they control most of it, guys, and when we are buying off of speculation, that thing takes off, okay? It magnifies it because they hold most of it. So with that being said, guys, Cara is still in a good place, guys. Still in a good place, as well as Impl. A lot of these big investors isn't giving up. They just wanted to lock in some gains because these guys were betting on, they were way ahead of FDA approvals. Okay, guys, these guys were in the stock months before these FDA approvals. So when they get a chance like this, they lock in some gains and keep their feet still. Okay, because like I said, the biggest catalyst is the revenue results from these products hitting the market. That is the biggest catalyst. Okay, moving forward. Now let's talk about what you guys want me to talk about. Let you guys take the floor. What you guys want me to talk about, man? Drop it in the comment section. Hippo. Yeah, guys, we call it that one. Other than that, agreed. Talk about any. Oh, talk about any. So we're gonna talk about any real quick, guys. Let's talk about any. Now, what's going on with these crypto stocks, guys? Yesterday, we were looking at how well Bitcoin, Ether was trending. Okay, we wake up this morning, they have made a whole turnaround on us, guys. Now, that doesn't mean these stocks isn't a buy. Any Bit Digital, Bit Mining, guys, these are crypto trending stocks. So even though crypto is overall higher than it was a week ago, guys, if we come in the open and Bitcoin isn't trending, it is down now, these stocks are going to see some pullback. Okay, that is the good thing slash bad thing about it. Okay, because we do not have too much control over what Bitcoin does overnight. So you do want to get an early seat in these stocks so you will not be worried about things like that, guys, because let's say if you did have an average cost here at $1.28, a very early C, this volatility wouldn't even made you think twice about selling. Okay. Now that is the real reason why I try to encourage you guys, even though that the stock isn't being talked about just yet or certain plays, guys, they are gems. Okay. You have to look at what the company has going for it overall. Just do not flock to a stock because a lot of people are talking about it. Because if a lot of people are talking about it, you are too late. Okay, if people are talking about it, you're seeing it in Reddit forums, you're seeing it all over the Discord, you're seeing it all over here. If people are speaking on it, you are most likely too late. Now, if you can get in a stock that no one is talking about, like say, for instance, all you BBIG guys, let's say, for instance, if you got in BBIG before the talk, okay, you could have had a $2 cost average. If you got in before everybody spoke on it, you would have had a $2 cost average. But I see a lot of people are trying to scalp and jump in BBIG at these very volatile levels. Okay, guys, like I've been telling you for quite some time now, buy on the weekly dip. Okay, now if we look here at this week, of course, the weekly dip wasn't the best dip here, but I'm pretty sure if you guys would have tried to buy this thing in the beginning of this week, I'm pretty sure Tuesday would have failed more, Wednesday would have failed more, Thursday you would have got some gains back. You don't want to be doing that, guys, because if you do apply this weekly buy-in on a red week, I'm telling you guys, you will be 100% better at trading stocks. Okay. Now, a lot of people tend to find themselves chasing a stock. And if you ask me, guys, right now, YOLOing in BBIG, guys, is a very, very risky thing. We do see somewhat consolidation with a long range. With that, though, guys, with long range consolidation, this stock can fall either one way, up or down. So at these prices, guys, you have to assess that risk versus reward. Now, looking here, if we take a look at today's trading so far on BBIG, as you can see here, very, very volatile, guys. Now, a lot of people, I tell you guys all the time, wait until the market opens and sit back and see how it reacts to the opening price. Okay. Now, the opening price, $7.63. Now, we didn't see too much movement jumping in the pre-market after the rise, of course. Towards this time, guys, very stagnant trading. But right towards the open, we start to see a climb. Okay, volume kicking in, a lot of that. But right at the bell, guys, we see these huge candles coming out the stock on the day, on the 1 minute chart. Okay, huge amount of shares, 500,000 on this minute. All three of these minutes see at least 500,000 shares. If we take a look here at the volume, heavy volume. Okay, heavy volume on today's trading. Now that market cap is getting lower here, guys. Market cap is getting overall lower. But if we look here at this turnover rate, we didn't even push too much gains in this stock to see a high turnover rate like that. My belief is being that a lot of people are giving up on BBIG. A lot of people are giving it up. That is just the truth, guys. I know it's a lot of BBIG diehards out there, but you guys got to know when to buy the stock and when to sell it. Okay, these runs doesn't last forever. Okay. With that being said, guys, you do have to lock in some of those gains. If BBIG shot up 20%, closed up at 20%, a lot of people would be suggesting to buy that thing. The aftermarket, it's running, but it's running off of retail investor interest alone. Okay, so that there isn't 100% Okay, guys, because you having to rely on thousands of other people to hold their shares for this thing to move is comical. Okay, do not get caught up doing that, guys. Do not let anyone talk you into making these crazy moves. I'm not saying BBIG isn't a buy, but as of now, with this volatility, this high turnover rate, and we didn't even punch that high in price, BBIG is in a hold. Okay, if you're caught in the high 10s, maybe 11s, this isn't the time to average down. Do not get in over yourself, guys, because this thing can fall. Now, if it don't fall, I'm pretty sure we're going to go over the 52-week high. That is the situation that BBIG is in. So if you are in the $11, guys, do not panic. Sit around for a while, because if you get caught up buying this thing now and this thing swings in the opposite direction, it's going to move pretty fast, guys. It's going to move pretty fast. But if we look here at the analysis on today's trading, as you can see here, we do see buying pressure. It is, I call this a nice buying pressure. I'm not going to call it too big. We do see all three levels outperforming the outflow. And we do have a nice large scale orders in the last 5 days weighing in on the buy side. But as you can see here, seeing as though that this stock 52-week low is $1. And if we go back on this day chart, guys, with these huge candles like this, we're going to see a cool off in the near future. Now, that cool off can result into a huge swing back up in price. But if this thing goes down further, I'm pretty sure a lot of people is going to be willing to buy BBIG. But you guys have to realize, I'll say it again, it's a time to buy a stock and it's a time to sell it. As of now, guys, this isn't the time to be going BBIG crazy. This is the time to keep it in your watch list and try to get a very good scalp price, okay? A very good scalp price. Now we're going to take a look at ZIOP, guys. I hope you guys caught that alert yesterday, right? You guys, I put this alert out yesterday during the live stream in case you guys didn't check that out. When we went over this stock during the live stream, I saw some very, very, very key things that caught my eye that let me know this thing was ready to move. Now, what we're looking at here is the order flow distribution. You guys know, like, how I love to check this thing out to assess what's going on. But as you can see here, we don't pay too much attention to that medium. But that small, guys, that small has to overcome. Now, even though we see this spike in price, if we look here, huge volume, okay? And to see that this thing is showing selling pressure is crazy. But the reason why it is showing selling pressure as of now, if we take a look here, guys, from this peak, okay, this is, if you were checking this thing out throughout the whole day, guys, you know what I'm talking about, right? Around this time, the stock actually was outperforming. The inflow was actually outperforming the outflow, okay? And then this happened. And then this landslide happened. If we check out these candles, it's huge, huge shares in a 1-minute time frame. A lot of volume coming into the stock. But these sell-offs are huge in value. Let's take a look at institutional holdings. As you can see here, that is quite high. Okay, 53.90%. Now, like I said to you guys earlier in this video, when you come across a stock that has a high percentage on the institutional ownership, the institutions does play a very, very big part on which way the stock may swing. For instance, by them owning 53%, they can easily sell 20%. Sell 20% of that ownership, guys, lock in some decent amount of gains, and this stock price will fall. Okay, 20% of that will put this free float crazy high. Okay, guys. So that being said, as you can see here on the day chart, on the 1 minute chart from today's trading, as you can see here, we're currently sitting above the VWAP. We did that nice spike, but since then we are cooling off, guys. If this thing can close above the VWAP, we might see a small run on this stock. So seeing as though that it is a $2.19 stock, a lot of new retail investors is attracted by a penny stock due to the fact that they love to have a lot of shares. Okay, guys, but do not get that mixed up. That is not always a good thing to go off of, due to the fact that you can be in $100 stock and see faster gains and more potential than a $2 stock. Okay, guys. For instance, Tesla. Okay, Tesla was once a $50 stock. Now look at it now. Okay. That being said, keep your eyes out on this thing. I do think we will start to pick up some momentum in the aftermarket here. Okay, let's just see how this thing closes, and make sure you keep your eyes out on that. What, guys? That freaking value. Keep your eyes out on that volume. I do believe we will be around 70 million towards the end of the day, but order flow distribution needs to pick up here. Not only that, let's take another look at these indicators really quick. As you can see here, that free flow is quite high. Turnover rate isn't that high for us to be over 30% gain, even seeing more gain than that. But we're currently trading along the VWAP, which is a very good indicator this stock can hold. Seeing that low turnover rate is an indicator that people are willing to hold this stock throughout the upcoming week, and hope for it to push further. Now, let's take another look at this day chart. Now, guys, as you can see here, this thing bottomed out at $1.26. Now, that would have been your early seat, guys. Now, I'm not going to say get out there and jump on this stock right now, guys, because if you ask me, risk versus reward right now isn't in your favor. Okay, if you did miss my alert yesterday, guys, we throw out alerts every day. Do not be bummed about it, because I got some more heat for you in this video. But other than that, guys, if you did take that alert, power to you guys. Market cap is getting close to $500 million here. Okay, average volume is quite low, but we pushed through that pretty tough today. Now, give me some more stocks, guys. We CTRX. Lex Lucy has BBIG at $4.17. That is good. Honestly, like easy seat. Easy seat. Everybody get like Lucy and get an easy seat, man, because like she said, she has BBIG at $4.17. Let's go take a look back at BBIG. Okay, that is what we call an early seat. Now, if BBIG went to $7.50, Lucy is still in a good position, guys. She's not sweating a small volatile days, because it is somewhat still trading in the same area. She's not worried about averaging down just yet, because she have a very good, well, averaging up. She has a very good cost average on her BBIG position. Okay, guys, you do not want to get this thing at $8. I'm just being honest. $8, no. Now, if this day chart looked a little bit different, then maybe yes. But the way these last few days been trading, guys, BBIG is going to see a huge one-way ticket, either up or down, pretty soon. Now, with that being a 50% chance, you guys have to assess that risk versus reward on your own, guys. If you ask me, it's not there. Can you look at KPLT, Catapult? Guys, you know, big bulls on Catapult around here. Now, Catapult, even though we did draw back from today's high being $7.46 so far, that is okay, because if you look at this chart overall, we are in a good swing, guys. Even though we see this red day, that is okay, because any stock that a healthy stock that wants to build support on the way up, guys, we do have to see these drawbacks. We can't shoot straight to the moon, because if we do that, that will hurt us in the long run, especially us long holders on Catapult, guys, people that is long on it. If this thing shot straight up, it's going to shoot straight down, okay? People are going to cash in gains mighty fast, because if you look here at this gap, guys, if this thing shoots up fast, which we don't want it to do, this thing is going to gap back down. It's going to fill that gap. People that is bag holding, that will have an opportunity to no longer be a bag holder here in KPLT, is most likely to take that chance and sell off their shares. But if we slow creep, turnover rate stays down, guys, and that will not scare people into panic selling for a gain, for a small gain. Okay, if you've been bag holding a stock for 3 weeks, been down over 20%, 30% on the play, in the moment you are up 2 to 3%, most likely you're going to sell, or you're going to sell before then when you get close to it. So with that being said, guys, this thing is moving the right way we want it to, okay? And not only that, guys, if you look here, that free float is appealing. It's very appealing. As you can see there, free float being 36 million, okay? With the outstanding shares being 96.82 million. You guys do the math. A decent amount of shares are being held, okay, guys? A very nice amount of shares are being held here in KPLT. Even though we have been on a slow roll, but a for sure roll, people are still willing to hold the stock. People want to see that $10 level. And if we can see support without a major drawback around $10, I do believe that will be our floor moving forward. Okay, because that free float compared to the outstanding shares, guys, is phenomenal. Okay, that is a key indicator you guys need to keep looking at as well. Make sure you guys comparing that shares out to that free float. Free float is the number of shares that is freely available to buy, meaning I don't own them, you don't own these shares. Okay, now shares outstanding is the amount of shares that the company has put out there for purchase, whether that is an institutional holder, an individual investor, hedge fund, anything you name it. That outstanding shares is for us all. Now, to see that a nice chunk is being held, low turnover rate, if we look here at the analysis and we take a look here at the order flow, which is very, very impressive on these large scale orders in the last 5 days, we are looking very, very good. Okay, guys, my bet over the weekend, I was betting that we was going to see another large scale inflow surpassing the outflow today. But to see where it's at right now, I am fine with that. Because if we add these up, today's outflow don't come near at all. But looking here at the small, it is still a very tight battle here. Okay, that small represents you and I, guys, small retail investor. Okay, its medium tends to point out the big whales. And that large guy, we know that is hedge funds and institutions. Okay, even though they can sell and buy at the medium scale, guys, they tend to use the large scale unless the hedge funds are short laddering, attacking us with the small in and outflow. That is the only time we see huge numbers. And we were seeing huge numbers in AMC on that small order flow distribution during the very, very market manipulating days. Okay, huge historical numbers. Okay, historical numbers on that small. But all in all, KPLT is a buy. Okay, guys. like it is safe to say you can get this stock at this price. Okay. Why? Because we don't see a big shoot up like we see in most of these other stocks with a huge volatile back and forth fight, okay, between up and down. But looking at this estimated borrow fee, it isn't high, 14.48%. So I'm pretty sure hedge funds are all over this stock. Let's see if they do have it listed. And they do, surprisingly. As you can see here, over time, the short interest in this stock has been gradually getting higher. Now, the reason for that, guys, can be that the hedge funds believe that this stock will go further down in price. Okay, but a lot of times volume brings in hedges, guys. If a stock is seeing abnormal levels of value, okay, the hedge funds are going to sweep in. Why? Because there are a lot of shares being bought, and they can easily make a quick transaction on a stock that is pouring in value. Okay, that is why we see these stocks that shoot up in value, guys, huge days in value. We tend to see short interest hit that stock that it never saw before. Okay, I saw some stocks that didn't have any zero. It had zero short interest. And then I want to say a few weeks go by, guys, volume started picking up in this stock. And that is when that short interest started to come alive in the stock, guys. So shorts does love value. So keep that in mind, guys. But to deter anything in our way, what do we do, guys? We grab that early seat for an easy seat. That is the best strategy. I don't care if you're buying on a weekly dip. Anything that I have gave to you guys as a strategy in trading, the most important thing is getting a early seat. Okay, getting an early seat. Why? Because that is the easy seat, guys. Trading in this volatile market isn't too good for the health, guys. So you don't want to keep worrying about a stock or having to wake up very early just to watch it. Okay, guys, I'm not used to doing that. I had to start doing that once I started doing YouTube and all that. That is when I started to get into these penny stocks and all that because, guys, I am a long-term investor. Okay, doing YouTube, you guys got me. You turned me in from a long-term investor to a swing trader, day trader, guys. Like, you guys got me all over the place. You guys giving me good alerts too, man. I made a lot of money listening to you guys. Okay, pay attention to, hold on, pay attention to blockchain, coin, ASH project. Everything is going down. Ash hasn't gone down. It's about to go up. Buzz mining, thanks in advance. Think, make decisions. Yeah, man, I don't know too much about crypto. All right, not too much, guys. Not too much. Only thing I know about crypto is Bitcoin, Ether, the main ones, guys. I'm not too big in the altcoins. ATER. My boy Chris wanted to see ATER. All right, guys, let's see ATER. Looking at ATER, I love the analyst price target. Okay, they're quite bullish on it. Seeing that 40% on the strong buy, it's quite cool. But what is very good is to see this thing based on 5 analysts. Okay, anytime I tend to see a recommendation rating from analysts, if it's only rated by 1, guys, I tend to look past it. You see this thing at 5, that is cool with me. That is believable now. Okay, now looking here at the value today, I'm pretty sure we're going to close over 4 times its average. Turnover rate, let me go back to this day chart, this 1-minute chart. I always get that mixed up. But looking at this turnover rate, I see why it's 42. I see why it's 42% because we saw this type of trending. We saw this type of movement in a few other stocks I showed you guys this morning, and that's is what we call a swing cycle. A few stocks tend to will trade on the same swing cycle. Okay, we see the same swing cycle going on in SPRT, BBIG. Noro is in that same swing cycle, guys. So, with that being said, this thing saw huge volatility, almost hitting $8 on the trade. Okay, so that is cool, seeing as though that this stock does have potential. But we want to check these 1-minute candles so we can see how legit this buying was. Okay, to see 400,000 shares being traded in that very second, well, that very minute for a 4% gain isn't giving me the red flag of this buy being a institution. Okay, the reason why we want to check these 1-minute candles, because if we can see a red flag of this being a institutional buy, that will give us a warning to watch out for that exit candle. Okay, let's see. It hasn't exited yet. So I'm pretty sure if that was an institutional buy, that candle would have exited already. Now, we take a look here at this analysis. Let's see what type of players are really playing the stock today. Okay, we see the big boys are out. We see those large scales moving on the in outflow. Whales are in the building, and small retail investors are doing swell as well. Okay, but these are some high numbers. Okay, in comparison with these, okay, not too big of a gap. All right, but if we look here in the large scale orders in the last 5 days, if we don't pick that up on today's trading here in ATER, guys, tomorrow can be a sideways day, meaning trading stagnant, or a red day for the stock. Okay, because if we look at this turnover rate, 42.47, and to see that this thing, the price that we is trading at now, as you can see here, guys, these uptrends and downtrends, guys, it reminds me of our beloved AMC. You guys remember that? When AMC first hit $17. Man, I sound like an old man, huh? That was a long time ago. But when AMC first hit $17 and we started to see the obvious ladder attacks, in case you guys do not know what a ladder attack is, that is the hedge funds actually buying shares. Okay, this isn't them selling or borrowing of the shares. This is them buying of the shares and selling them to their, what they call it, their high frequency trading type of programs they have going on. They trade those things back and forth, lowering the price every single time. Now, the way we were fighting that off is identifying the bottom of the short ladder attack. And we were hitting them pretty good on that. And that resulted into the stock actually springboarding. Okay, we were finding that bottom on the short ladder attacks. And when we found that bottom, guys, huge volume was coming in AMC. That's how we were playing it. Huge volume were coming in, and that instantly started to bounce the stock off the bottom. Okay. Now, with that being said, this thing, manipulation going on in here, it's there, obviously. But if we look here at, let's take a look and see if Webull has it. They don't show a lot of them, but they too. It's showing short interest on the stock. But as you can see here, guys, huge short interest, what tells us that hedge funds are in the building. And that gives us more reassurance that this isn't nothing but market manipulation. Okay. Now, if this stock didn't have any short interest whatsoever, that would be a worry. But guys, if these guys are shorting a stock and causing the price to go down, that is synthetic, they making the price synthetically go down because that isn't the actual price. Why wouldn't you buy the shares at the bottom? That is A key thing though, guys, finding that bottom of the short ladder attacks. But lately, AMC, I haven't saw a short ladder attack in AMC in quite a while. And the reason why we don't see that, because the buying pressure, the buying of the shares has cooled down. And when the cool down, I'm talking, guys, it's going from fire to ice type of cool down. Let's jump over here on AMC, guys. AMC. AMC is picking up in price. A lot of the, I don't mean to talk down on the AMC shareholders, but come on, guys. One thing I can say about an AMC shareholder, it's so many bag holders in AMC. The AMC community goes crazy over a 5% gain. That lets you know how many bag holders is actually in the stock now. If you're up in the 70s, I wouldn't average down just yet. Like I've been telling you guys, AMC is going to go back under $30. We did it once, and we saw the hedge funds buy back some of those shares at the 29. I think it was like 29.80. It was something in the 29s, guys, and that thing touched $29 for a very, very brief moment. And once I saw that candle pick up, I shot over to the order flow distribution, and there it was, guys. Huge buying pressure hit the stock so crazy on a large scale. Guys, I instantly knew what it was. I instantly knew it was the hedge funds buying back some shares, okay, at that 29 price. Most likely giving back the shares that they borrowed at $65. Because if you remember when we hit that $72.62, guys, the very next following day is when hedge funds got in the biggest short position they ever did in AMC. Okay, biggest. Now, they did return all the shares they borrowed at 65, but they did slow bleed some. Okay, now that being said, they still do have shares they borrowed at $5. So their tactic by doing this is to scale down some of those losses, because if they can scale down some of those losses as much as possible, I'm pretty sure they will be willing to close that position, that short position that they borrowed the shares at $5. Okay, which can result in AMC having a small spike to medium spike. But other than that, guys, AMC is still a trending topic as far as the stock community. Okay, but my only concern here is that outstanding shares compared to the free float. Looking here at the turnover rate, 16.46%, not high whatsoever. But seeing as though, guys, this 52-week low being $1.91, and the 52-week high being $72.62, and people are still uttering the words AMC short squeeze. Guys, from $1.91 all the way to $72.62 is a short squeeze. Okay, that is, I don't know what more can you guys ask for. I mean, a lot of people don't want to give up AMC because they have so much tied in it. Okay, guys, I know people love the AMC community. A lot of people have started relationships with people holding AMC. So with that being said, a lot of people just don't want to give it up. It's more of a brotherhood now. So with that being said, I do see people continuing to hold this stock. And by doing so, it's going to give it a little life. But eventually, guys, people are going to give up on AMC completely due to the fact that $72.62 being the 52-week high. I'm going to be completely honest with you guys. I honestly do not think we'll hit those levels again. Maybe 55, but $72.62. Look around, guys. Not too many people are willing to buy the $47.14 share price, okay? So with that being said, it pushing all the way up there. Only way I can see that happening is unless hedge funds close out their position at this price, but I can't see them doing that right now, guys, due to the fact that AMC is still down. It's still down on the overall as far as the 72.62, but the hedge funds actually have capital to hold AMC for quite some time, guys. A very long time. Why? Because they are making money in other places, and that is why I try to get the AMC community, the GME community, to realize in order to fight back this big guy we call the hedge funds, we have to make money in other places and fund this, because these guys are working with billions, guys. They're working with billions of dollars on capital. So with that being said, I hope me talking isn't the reason why AMC is going down right now, guys. Sorry about that. But anyway, with that being said, though, guys, AMC is going to die out. Okay, one of my biggest things I want to get out to a lot of you subscribers: stop hopping in a stock blindly, hoping for a short squeeze to happen. Stop trying to find a stock to get in before a short squeeze happen in the stock. Okay, guys, because a short squeeze is investor driven, okay? Meaning, guys, you will have to build a cult, a group around these stocks. You have to build a whole following around it. AMC has one, GME has one, Clov tried it, Wish tried it. You guys know they didn't too much pan out, okay? But AMC and GME does have the numbers to prove it. Okay, looking at AMC's 52-week high and the 52-week low, let's look at GME's. Now, remind you guys, we over at the Wallstreetbets Reddit page was buying GME in June, okay? Now, looking at this 52-week high, guys, being $483 and the 52-week low being $5.87. And a lot of people are saying the words, we didn't short squeeze yet. That wasn't the actual short squeeze. I mean, what else do you guys want? And this is why I preach to you guys. Early seat is an easy seat. If you're buying AMC above $100, my friend, is what we call in a tough seat. Okay, because AMC does have a wide range of consolidation here. If we take a look here at the day chart, wide range of consolidation, guys. Okay, as you can see here, AMC has been trading between levels of $150 basically and between $120 comfortably. Okay, now seeing that wide range of consolidation can send this stock in one way or the other. Whenever we see a stock with huge consolidation, it's going to go in one way or another. As you can see here, when we saw this huge range of consolidation, up, down, up, down, up, down, up, down, up, down. Some people call it volatile. I call this type of movement consolidation because as you see here, guys, this thing bottomed out right here on $196. And it stayed between those levels, okay? And 344 stayed between those levels in trading for quite some time. That's what we call a range of a wide range of volatility. And with that being said, guys, as you can see the result of that. Okay? Now, moving forward, though, I do believe, guys, GME's following is the strongest out of Clover Health, GameStop, AMC, Tesla, Alibaba. Anything that they say is buzzing on Wallstreetbets, GME has more of a following. Not only that, guys, those guys over at GME hold the stock, all right? So that being said, I do believe GME is in the same situation, though, guys. I do believe it is a time. If you're still holding on to these stocks, guys, put it this way. If you continue to follow the channel, I'm guaranteeing you will make If you lost money in these trades, are currently down, I'm guaranteeing you guys, you will make what you lost in these stomp trades and then some. I guarantee that, guys, and you will be able to flood that money to your AMC GME position as much as you want to, guys. Okay, so moving on from this talk, guys, I know I spoke a little bit about that. Your wife's boyfriend says they have too many fake shares. Failure to the peers, failure to delivers. We ain't leaving. Now, one thing about failure to deliver, if you know they are failing to deliver these stocks, and you know 90% of the time that you are buying shares, they are synthetic, they don't exist, but the shares that you are buying that is synthetic and don't exist, you're buying it from a hedge fund. And if that is true, that these shares are synthetic and fake, you do realize you are just handing these hedge funds over your capital. Because a lot of people don't understand that the stock market isn't a blockchain. They do not keep ledgers on this whatsoever. So you have no way of proving that you even bought an AMC share. It's no way, guys. That is why I'm saying we can't win this battle. We won as much as we can, but a lot of people that is coming late to the party thinks this is going to continue, and a lot of people mislead them into telling them, yeah, it's not over with, the squeeze didn't happen, this and that, instead of telling them the actual factuals, okay? Instead of telling them the factuals, instead of telling them the reason why we got GME all the way up to $400 and some is because we were able to fund it with all the money we were making on Nio. Man, I made so much money off of Nio last summer, guys, in June. Like the games I was throwing at GME at the time, I was losing, but it was so hilarious because we were making a killing, guys, a killing on Nio. But the media took over. Once the media took over, everybody was just GME crazy. So that took things out of perspective for a lot of people. People just went GME only. Got caught in a lot of bad situations without any buying power to average down. So people got stuck in bad positions, steady buying on the rise up, okay? Believing the hype, following the hype, and not trying to get an early seat, guys. Try to get an early seat in every play that you consider. If that play isn't an early seat for you, then just sit back, guys. Do not jump in it. It's hundreds of thousands of stocks out there. Now, each stock does give you an opportunity to make money at some point. So with that being said, guys, do not waste too much of your time chasing a short squeeze. Now, NRBO. Now, a lot of you guys, you know, I made that a major buy alert. And usually my major buy alerts do move pretty fast, okay, as far as giving out that profit. But looking here at NRBO, which is very special here. What I tell you guys in the beginning of this video, was parts of the video, I want you guys to take a look at what that shares outstanding in the free float. Incredible. Incredible, guys. Now, let's look over here at the analysis so we can really get a feel for who's holding this stock. With the institutions only holding 15.88%, that is ideal, okay, because they do not have too much sway. Like we saw in Cara and a few other stocks, institutions tend to jump on those stocks if they're a long-term investment, okay? But here, since we don't see too much institutional ownership here, they will not have that much sway in a rise. Our buying, as far as anyone that is buying from out the free float, okay, our buying doesn't have that much effect, okay, like it does in Cara and I Forgot the other stock, guys. IMPL, like that. IMPL, 1,000 shares can go through on a minute, as far as the minute chart goes, and that thing is going to shoot up. I'm talking at least 7% gain just off 10,000 shares being bought. Okay. Now, the way this thing is moving, though, guys, seeing as though that we do see a very small free float under 5 million, a extremely low turnover rate. Volume is 2.47 million. We're currently under the value, and we have been under the value for quite some time. Okay, guys. Now, what did I tell you about a stock that is trading much under its average consistently? In this case, seeing as though the free float is much smaller and the volume is getting lower, and we do see a small turnover rate, guys, people are continuing to hold this stock. Tomorrow's free float is going to be even smaller, and the next day after that. Why is people buying and holding Rubo? That is because it is setting itself up for a huge play. If you look here at the order flow distribution, which is exciting to me, is that we do not see too much movement on the 3rd, the 7th, the 1st, and the 31st. And that outflow we see here on the 20th isn't too much to worry about, okay? My only concern here is that small to pick up. A lot of people isn't aware of this stock, and they don't know how that free float can be manipulated by anyone, really. I mean, that thing can be manipulated by me, you, an institutional investor. Okay, but if one person picks up all those free floated shares, this is why you don't see that happen. If someone picked up all those shares right now, the person behind them will sell off, and now they will be a bad holder. Okay, so if I decided to buy that 4.52 million shares in the free float right now, this stock could probably jump up to like $9 because the supply and demand comes into effect. Okay, so if it's not that much supply and the stock is at a high demand, the price goes up naturally. So with that being said, that is going to play a huge part in NRBO. Okay, if you bought this stock when I suggested it, a lot of people bought it yesterday and seen a bad day, but I suggested this thing quite some time ago, guys. Guys, I suggested this stock at least the 30th, okay? Maybe even further than that, guys. If you guys know when I suggested this as a major buy alert, please let me know, because I'm pretty sure when I put out that alert, you guys should still be green, guys. Still be green. And currently, that is a easy seat. If we look here at the 52-week low being $2.70, but check out this day chart. Let's zoom out. As you can see here, this stock bottomed out at $2.70, correct? But we do not see any levels under that, which is very appealing to me when I assess risk versus reward. And right now, guys, at this price, reward is in your favor. Seeing that 52-week high being $7.61. The way NRBO is set up, it is set up to fly past that, okay? Especially with these slow everyday gain movement we see here in the stock. That, in fact, is going to play well in our part as well, because that is going to keep that turnover rate low until it's time to shoot up in price. So if you can get in this stock now, when we do shoot up in price very high, we're going to continue to see this graduate gain over time. When you do see that gain, you will be in a better position to either sell it, or you will be in a better position to sell it faster. You won't have to be holding it, hoping to get more. You will be more satisfied. You won't be trying to catch the top of that spike. Why? Because you have a very good early seat. You were up phenomenal before the 60% spike, and you just an early seat, because that is what we call an early seat, guys. Okay, my boy David said, yeehaw. Gary Steele, AQST. I got you, Gary. I got you. Yeah, I got you. You know what? You guys sent some super chats yesterday, man. Today, can you please drop that chair? That's all I want to see today, guys. Drop that chair in the comment section. Please let me see it. Drop that seat, guys. I'll kick it off for you. Let me kick that chair off really quick, guys. Because you know, guys, we love those early seats because it's the easy seat. But all in all, still a buy. Very good price to grab this thing at. It isn't over with. I was telling you guys that this thing is going to take time because of the way it is set up. But I wanted to get you guys in a major buy alert very early. So you will have the opportunity to shave off some of your position and keep some in because your seat is so early, even though that after we see that drawback from the spike or the new 52-week high that we're going to see, you will still be in a comfortable position to keep gains in and keep this thing moving. Okay, guys, so with that being said, take that advantage. Chris said, I need to upgrade my seat. You guys see that seat Chris put up? Hey, Chris, man, it's better than nothing. You should check out the Discord. Those guys like to throw up toilets and wheelchairs. Crazy, 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 man. But I love my TTM family. Clov. Did we see Clov yet? Yeah, we're about to talk about Clov right now. Clov. And we're going to talk about APOP after this. Now, guys, another meme stock. Now, this is prime example, okay? For instance, which a lot of BBIG people are going through right now. We see these huge spikes, which BBIG is seeing back and forth right now. People around this time were hyping up Clov so much. They caused a lot of bag holders in the stock, okay? Now, if you would have got the early seat, of course, you would still being able to hold this stock at this price and still be sitting above water. But seeing as though that this stock had huge candles coming in and coming out shows you the type of stock that this is. It's a what can I say, guys? When you see stuff like this, this is mostly investor driven, okay? And to see how it cooled off gradually slow. Okay, we do see high amounts of shares, over 50 million on these graduate slow moves. But all in all, overall, this stock is in a slight downtrend because we see this thing starting to flatten out. But yes, guys, like I always tell you, it is a time to buy and sell a stock. Now, today was the day to buy Clov. Now, is it still the time to buy Clov? Guys, you know we keep it real here. No, it's not. All right, now if you were able to get this thing, let's take a look here at the 1-minute chart. This thing wasn't trending the day before, so it's most likely was safe to buy in the pre-market. Now, anytime a stock was trending after market the day before, pre-market that day, you want to sit back, wait to see how the market reacts to the opening price. And here in Clov, guys, as you can see here, it wasn't trending during the pre-market. We do see a spike, but far as graduate gain, we do not see this thing moving up. Okay, we do see the opening spike, of course, but when you come into a situation like this, guys, it is safe to buy in the pre-market. Okay, pre-aftermarket, as long as that thing isn't trending heavily the day before. But as you can see here, right at the bell, Clov was moving decent, but a lot of other AMC GME, everything is moving up right now. Okay, now we can take into consideration a lot of this money can be coming from crypto. Okay, guys, because we know a lot of people that trade cryptocurrency also trade stocks And whenever we see crypto trend starts to trend and a vast amount of money leaves out that morning before the market opens, it always finds its way. AMC, Clov, Wish, GME, it always finds its way to the stocks and not other stocks, guys. So right now, the stock market that we are living in now, guys, is totally different from when I started. But as you can see here, guys, this is what we call nice, sustainable gain. Okay, as you can see here, we do shoot up in price. Nice drawbacks, okay? Nice drawbacks. But we are moving up gradually. We do see some drawbacks, but draw forwards. Now, this right here is the opposite of a short ladder attack. But get this, guys. Womp womp. Short ladder attack. That's crazy, right? But look here. This candle. Let's check this. In 1 minute. But we do see high value 150. But checking these exit candles. Let's take a look here at the analysis first. Whoa. Above its analyst price target. But we all know, guys, that these stomp / Reddit rally stocks do not trade off its fundamentals at all. So that analyst price target for Clov, GameStop, AMC, Wish, throw it out the window, guys, because these things isn't trading off its fundamentals whatsoever. Okay, it's going up off supply and demand, and it's going down off supply and demand. Okay, guys, people are buying stock, holding stock, and that is why Clov shot up more than others, as far as the stock world goes. But what we see here in Clov, if Clov can close above this VWAP, which we're getting pretty close, I do believe Clov will see either stagnant trading in the aftermarket or I won't say 17% in the aftermarket, but somewhere around levels 7% max. Okay, for Clov. Okay, because as of now, Clov doesn't have a following like AMC, GME. You know, guys. So even my son even mentioned they have AMC in Roblox. So AMC is everywhere, guys. I even saw, you know what's strange? They even have the actual Dogecoin dog on the coin in Roblox, guys. I don't know where all this is stemming from. Of course, social media and all that, but these are kids' video games, guys, and they are slowly but surely winging the stock market onto them. Stock market cryptocurrency, but kids are into that. And that is something good to see, guys. Tony, when will Clov explode? All right. Let's look at that low. 52-week low, $6.31. The high being 28. Risk versus reward. As of now, the reward is in your favor if you do jump on this stock. But I'm not. But the thing you have to take into consideration, guys, the 52-week low being $6.31. Now, let's take a look here at this day chart. Okay, there is that low. Now, since Clov does have a lot of people talking about it more than usual now, than it was on March 5th, as you can see here, on that low, I'm pretty sure that you don't have to worry about this thing getting that low moving forward. Okay, unless this thing shoots up to $100 tomorrow, you do not have to worry about this stock shooting back down to that 52-week low. Okay, but that 52-week high is up there. Now I do see us getting around $15, $16, maybe even $17. But to sit here and tell you as of now, it looks as though we can hit that 28.85, guys. I cannot lie to you. BBIG is ripping. BBIG is ripping. 11%. Wow, huge volatility, guys. Now, a lot of people are going to look at this and say, hey, is this the time to buy it? Guys, don't chase a stock. I heard somebody say yesterday in the comment section, a guy says to me, I'm down on SPRT. Should I just sell for the loss and put it all in BBIG? And I wanted to tell this guy a thing or two, guys. That is the most riskiest thing you can do. Sell for a loss and turn around and put it in the same swing cycle stock. Nah, not a good idea. If you're going to sell for a loss, start off fresh. Get you an early seed in the stock. Don't chase, because that is going to result in a downward thing, guys. But BBIG is starting to pick up. Let's look at this 1 minute chart really quick. Let's see these candles. We see 2 million in volume just on this candle alone. What's the average? Well, the volume today is 70, so can't call that an institutional. We want to find these institutional candles. Okay, we want to find the big players. When did they buy in, and what triggered this buying? Now let's look here at the order flow distribution. As you can see here, that large scale is in a tight battle. Let's watch out for that, because if this large can overcome it, BBIG will continue to rise. Now, looking here, you see the whales are weighing heavy, as well as the retail investor is weighing heavy as well. So, showing set buying pressure on the stock. But in the beginning of the day, that was not the case, guys. Now, as you can see here, what we are looking at here is the beginning of the day, huge volatile day. Dipped under the VWAP and instantly shot above it. Instantly. Nice, huge candles. But the reason why we see a lot of volume, okay, we see these candles. We see huge volume on these candles, but not too much gain. And the reason being that, guys, is if you look at the shares outstanding compared to the free float. Okay, not too many people were holding the stock when the market kicked off. Now, if that free float was half of where it's at now, I'm going to say like 30 million, the type of buying pressure we see here today, BBIG would have easily saw at least 40% gain on the type of buying pressure we are seeing right now. But in order for BBIG to achieve that turnover rate, a lot of people have to cool down. The reason why that turnover rate is so high, guys, because people are bag holding right now. People are either trying to break even or escape with a little bit of gains, because they're not too sure that this run is going to last. Why they're not too sure? It's because the volatility that we saw here in the past. Not only that, a lot of misleading things, guys. So when you mislead people into buying a stock like this that you are in, you not doing anything but hurting that stock community overall, because people lose faith and then they want to not believe it anymore. They want to believe that it can't run, it's set up, it's a scam, this and that, because they were fed a lie and they believed it. And now they want to give up on the stock market totally. So that being said, guys, we do have to give honest opinions when we are relaying stock information to each other, okay? Because that doesn't do nothing but hurt the Wallstreetbets / TTF community, guys. So let's keep it funky and fresh, okay? But yeah, though, BBIG is looking good. Are you still bullish on SPRT? Again, let me check this candle out before we look at SPRT so I can check this out. Let me see these candles. I'm trying to find. This isn't looking like any institutional buying. Well, that's obvious, because we do see a tight match, a stagnant match between the in and out, but it is hard to find the institutional buying on the large scale. We know it came in around this time, but with 1 million shares, that is considered a large scale order. Well, we know they didn't do all these shares, 2.67 million. We know that isn't all institutions, but they do have a huge chunk in that. Because if you look here, guys, with that free float being that low and the outstanding shares, being that high, the free float being that high and the shares outstanding being that close towards it, guys, that lets us know that this isn't too much of, what is it called? This isn't too much institutional selling or buying of the stock. And the reason why we can prove that, because if they were the ones doing it, guys, that shares outstanding compared to the free float will be much, much larger with these institutions holding more of the stock. Okay. They will be holding more and selling it during a time like this. So with that being said, BBIG, seeing that 52-week high being $11.90. Like I told you guys do not have to average down at these levels. Okay, BBIG, seeing that 52-week low being $1.11. If you're caught in the high 1190s, do not panic buy on this run up, trying to average down and hope you can scalp some gains today. Okay, guys, I'm not going to mislead you whatsoever, because it is a better way to go about that. Just sit back, sit tight, and wait for a dip. Okay, wait for a dip. So if you're in at $11, wait for at least $7, which was possible today. But seeing as though that this thing is trending now, it can give away its gains. Okay, see how it's starting to trend towards the end of the day, guys. We tend to see those gains washed out by the end of the aftermarket, for sure by the pre-market. Okay, so with that being said, keep your eyes out on this. I'm not saying it is going to go down, but just giving you guys a few scenarios. Make sure this thing closes above the VWAP. And if you're eyeing this stock, you're not in the stock, and you are wondering, is this the time to buy BBIG? I know a lot of you guys that's in the stock wants to see this thing to continue to run. I'm going to be honest, guys. Right now, I do foresee, if you had to get in this stock today, I do believe you will get a better buying opportunity towards the aftermarket, if not the aftermarket. Okay, guys, I'm just being honest. Okay, because when you're dealing with a volatile stock like this, it is a must that you get the best average cost if you're buying in, because the very next day things can swing. Okay, for the good or for the bad, of course. But for the bad, you got a lower cost average. Then if you're a guy that don't want to take a loss at all, then you have time to sell before you come to that. But if you're a guy that just, I got to make a trade, and you hop in this stock at $8.80, and this thing falls to $8.20 fast, and it continues to go down during the aftermarket hours, you have no more buying power. What can you do? You do not want to get caught in that position. So with that being said, if you're holding the stock, continue to hold. If this isn't the time to average down or up, because I do think we will hit those $7 levels, low $7 levels. Okay, that turnover rate is getting higher. Okay, guys, but if we want to try to determine who is the ones buying, who is the ones selling their shares, if we take a look here at BBIG, if we take a look here, now we see that outflow surpassing it, guys. Keep your eyes out on this. If you're in this stock, keep your eyes out on that large scale. Okay, that large scale, we know that thing starts to pick up around here, but they're masking it so well. You can't even identify which one was them. Probably because so much buying is coming in at the same time as the selling. So that 900,011 shares that was moved around this minute, seeing that it went down 1.12%, most likely it was probably close around the same amount, probably 450,000 being bought, 461,000 being sold, because we don't see that too much gain. I mean, too much takeaway on this candle. But as you can see here, the one we is building now. Watch these levels, guys. I kind of don't want to get off BBIG because I see this run, and I know a lot of you guys like to stay informed. But buying BB. Oh my God, Lucy, don't tell me that. Lucy said FOMO is buying BBIG right now. Is Lucy, are you telling me you are buying BBIG right now? Cashed in some BBIG at $9 and will buy back in if it dips. Another thing about the buyback in, guys, one thing I do not like about the buyback in, you're ruining your, hold on, let me see, what was your average cost? Cashed in BBG at 9, will buy in if it drops below $7.50. Okay, what was your BBIG cost average? If you sold BBIG at $9 and you plan on getting back in, if it drops below $7.50, what is your BBIG cost average? And I'm talking to Karan, I don't know how to say that name. No problem. I'm buying now. Lucy is nuts. My BBIG calls are up 42%. Lucy got an early seat. That's why. You got that early seat. People who are fear of missing out is buying BBIG right now. Totally true. It is called trading off emotions. The fear of missing out as well as greed. Okay. Now, looking at this, guys, what's 14? Okay, if you bought the stock today, you had a chance of getting 14% on a huge volatile stock. Now, if you were already in the stock, early seat, you are winning. But if you're taking more risk than reward day after day, it's going to backfire. But in this case, though, fear and greed, Black Nicholson. Cost average for BI was $6.69, but since I sold my highest shares first, it's now. Well, if you got a cost average that low, me personally, I wouldn't close out my position completely, especially if I'm a bull on it. I would have at least left some of those shares still in BBIG due to the fact that buying back in is going to ruin your cost average, okay? Now, a lot of people don't understand. A very low cost average can be very, very good later down the line, okay? Now, let's take, for instance, say you bought a penny stock, okay? It was $2 when you bought it. Now, you held it. You still got your $2 average cost. You got 1,000 shares. Now the stock is worth $20. Okay? So since it's worth $20 now, now that the stock price is $20, anytime that the stock moves 10%, you're doubling your money. And that is why, because 10% of 20 is $2. Okay, so every time 10% moves on that play, you're doubling your money. That is why I try to tell you guys an early seat, it can go a very, very long way, guys. Very, very long way. Any is tough today. Yeah, any all right. I mean, any's still in a good place, but the news with Bitcoin, Ether. But guys, we got a huge catalyst coming up. They secured their 60 mining rigs. They're not hurting their balance sheets with debt by going into debt to pay for that. They actually raised that money. So they did make the right move for anyone that is long on the stock. I know a lot of you day traders / swing traders probably got caught at the wrong time. But like I was saying, let's go look at any. Let's go look at any. One thing I can say about any, guys, you got to look at this day chart. Okay, that high being 1198. Now, once any gets its mining rigs fully running, I don't know when that will be, guys. If you do know when they are talking about it, let me know. But when any gets those mining rigs completely up and running, this stock is going to start moving. Okay, it's going to start moving on the selling and buying of Bitcoin, because if people are selling it and it has to go through any, okay, then any gets a cut on the sale and buy of the transaction. So that's the difference between mining. If crypto goes down a little bit, that isn't enough for these crypto trading stocks to go up in price. But if we see Bitcoin right now shoot down to 20,000, these crypto mining companies is going to see tons of money. Okay, so take that into consideration, guys. I'm bag holding Naked too. Naked is said to be the next stock to see a short squeeze. Let's take a look at Naked really quick. Data coming out this month, CRDF. Let's take a look at it. CRDF. I'm loving the day chart. Loving the day chart. Let's take a look at this 1 minute on the day. We do see a drawback. Okay, most of the day was under the VWAP. Check out this 1 minute candle. 82,000 shares. What's the average here? Okay, can't call that institutional drop. But looking here though, guys, the value is hugely low. As you can see here, average being under 690,000, that total being 688.11 thousand is the average. The value being 797.21 so far on today's value. So we're past the average. 52-week high is $25.50, and the current 52-week low is $4.88. But looking here at this market cap, guys, and looking at that free float, I can't say I would touch this thing. I can't say, I mean, it can be an early seat, but guys, that volume has to kick up. Not only that, if you look here, that turnover rate, I do not like that on a down day. Now, selling at a gain is cool, but to see people actually selling their position on this small slight day, as you can see here, though, guys, let's take a look back at this order flow distribution. See what's really going on behind the scenes. Okay, now, oh man, selling pressure. Complete selling pressure, even though the medium did outperform the outflows medium by a lot. That large scale of loan would just put selling pressure on this stock. Okay, the gap between the smalls isn't big enough, okay, to even compete with the gap with the large. Now, overall, this thing is seeing selling pressure. Now, I'm pretty sure the selling pressure came about the first half of the day, and that is where we see that turnover rate. But to my surprise, guys, is to see that large, okay? That large being mighty, mighty hefty, okay? What Peter Griffin say? Hefty, hefty, hefty. Wimpy, wimpy, wimpy. Something like that, right? Now, guys, was timed out by Black Nicholson. Black Nicholson beat A-Pop. I'm bag holding A-Pop. Bro, that's crazy. But yeah, though, guys, I wouldn't touch this thing due to the fact that I don't like the volume. I don't like the value that it's seeing. It's on a downtrend. It doesn't look appealing. Doesn't look appealing. I check out the financials. Check out that balance sheet. The balance sheet looks wonderful. But what's next to the balance sheet? Revenue. Q2. So let's look at the Q. From year over, we are better from the year over. But from the past quarter, no. 2021, yeah. From the quarter in the past, we are revenue went down a little bit. But we do see revenue coming in this stock, but we have to compare it to the operating income. 6.89 million with revenue being. So guys, they do have money coming in. They do have cash coming in the stock. So that is okay. But as of now, I wouldn't touch this thing. I would have to wait until some value get in. But as of now, this is still considered an early seed. But me personally, guys, I do think this thing will be showing some stagnant trading, okay, between the levels of $6.90 and $7.90 for a few days. Because it is showing here on this day chart, we do see some stagnant trading, but that is a sign for a very near breakout coming out. But with this low volume, I can't see it happening. Now, if you keep this in your watch list, watch that value, because the value does come in on this stock with that with the low average that we see here. This thing is going to pop. Okay, this thing is going to pop. Glad I'm not alone. And should I be adding WTER every Friday? Now, water, guys, which is one of the world's most safe penny stocks. Now, looking at water, let's take a look at this chart, guys. Water has went below. Water's seeing $1.75 today. Now, as far as water, since I'm long-term on this thing, guys, I do suggest to get out there and get this thing at $1.75. Okay, $1.75. If we do see $1.50, do not have to panic to average down. Okay, because you're still in the range. I do think we won't see levels around this price for too long. Okay, but other than that, guys, let's look at this analysis on today. Alkaline water is going to be a big name, big household name when it comes to the beverages, guys. They don't just sell water, they do sell flavored drinks. They have CBD products going on. So water does have a lot going for itself. And if you ask me, this is a hot acquisition target. Now, I don't suggest waiting to the end of the week, though, because honestly, I don't think we will see levels too much lower than this. If not, we could just bounce off these levels, guys. $1.75 is a buy in my book as far as WTER goes. Okay, I do have an average cost at 97 cents. We've been in this thing for a while, guys, for a very while. Been around before they even announced Shaq as the so-called ambassador. We were in the stock, so we saw a lot happen with it. I'm feeling comfortable holding it long term. Okay, I don't too much worry about this stock. Okay, I cannot look at it for months and months and months and not worry. Okay, because I don't have to worry about this thing, even though it's still a penny stock. The way it moves, guys, it doesn't move like a penny stock. This thing moves like a blue chip stock. Slow. Okay, low turnover rate. But as you can see here, the free float isn't low at all compared to that shares out. That lets you know not too many people know about this stock and isn't holding it. Okay, a lot of people don't know about alkaline water, but this is the most earliest seed I can find, you guys, because once people start talking about this stock, I'm sorry, you're going to be too late. Once Shaq makes a commercial and you see it go across the screen, my friend, you are too late. Okay, so with that being said, do some DD on this stock. I'm pretty sure you will be sold on it. Pretty sure, guys. Pretty sure. Root. We're going to talk about Root. Can't wait for Shaq Diesel to start promoting this. Man, bro, I cannot wait. VIH. Okay, we're going to talk about VIH after Root. Okay. Root is in what we call a downtrend. Now, the low on today's trading being $5.86, the high being $6.28. Root, so we gotta look at it overall on the day chart, see how it's been doing. Okay, We are on a slight downtrend from that peak, $8.40, not too long ago. Now, this day chart, we are seeing huge red candles, 22 million shares being moved around on this day for a loss of 19%. But on this huge day, 54 million shares for a loss of 0.16%, because we opened at $7.92. Our high on this day trading was $8.40, and we closed at $6.28. Definition of volatile. Now, moving forward though, guys, we are in a downtrend. Volume is getting lower on these downtrends, so that is a key indicator that this is selling pressure. Okay, now looking as though that the outflow is telling us that this thing isn't showing selling pressure, but we have to look at this 1 minute chart. The 1 minute chart is giving us some more detail on this thing, guys. This is considered selling pressure, totally selling pressure, and really depending on how we close. Okay, now if this thing closed at a low, selling pressure just got even more. But that selling pressure can result into buying pressure tomorrow. Okay, if this price gets low enough to where a lot of root bag holders want to average down, or people on the sidelines think this price is appealing, as you can see it at 52-week low being $5.19, we are getting close. Okay, guys, so the closer we get to those levels, expect this thing to make a turnaround, because I'm pretty sure it is bag holders in here ready to average down. There is people that's been on the sideline watching this thing and want to get a touch up, because if you look here, going from $5.19 and seeing a high $8.40, that's not too much movement, but it's gradual, and it was easy money. Easy money. A lot of people got excited over that, probably start relaying it to others, and now a lot of people most likely became bag holders. Because if you look here, guys, since this spike, we have been in a downtrend. So if anybody bought here, if you're still holding, you're a bag holder. If you bought here, you're bag holding. So if this stock gets closer to 52-week high, they're going to buy this thing up. So if you're up in the $8.40, I will scalp this thing today and try to get a very, very low cost average, low as possible though. Low as possible. And leave some room to average down just in case tomorrow comes in crazy. But this is for anyone that is so thirsty over their stock and want in on it now. Okay, make sure if you jump in on it now, you play it safe. All right. And hit that like button. You know it. Yeah, guys, that like button really does help this YouTube channel grow. Okay. Now, I mean, I get a kick out of making these videos, but if you guys can make this thing grow just by hitting the thumbs up, guys, I will really, really appreciate that, man. The way this channel grows really keeps me going and making these videos, guys, honestly. Now, the next stock we're going to talk about, and that is BBLG ripping again. I'm down $125. Bro, y'all keep talking about BBIG. Soon I go from it. 21% on the game. BBIG market cap is climbing. Like I told you guys, you do not have to panic and average down. Okay? Because if you're going to average down, make sure you average down. Make sure that average down is worth it. All right? And yes, it was more than a chance to get 20% gain here in BBIG today. Okay. That's if you would have bought it at the right time. Moving forward, though, I'm trying to chase this thing at this price, even if it shot up 40% right now. Just shot up to like $10.20, $10.50. I wouldn't be mad for not grabbing some, due to the fact that, guys, risk versus reward. I really do have very good control over that. Okay, I don't look at this as if I'm missing out on something, because guys, you can hop in this stock right now, right? You can hop in this thing right now, and the result be devastating. Okay, I'm not knocking BBIG whatsoever, but this thing isn't trading off news. This is all retail investor initiated, driven, guys. This isn't trading off any news. So with that being said, yeah, it can see some nice gain on it, but it's going to be volatile because these people hopping in BBIG isn't long-term shareholders. They're not long on it. They see it if BBIG went to $15 right now, a lot of people would sell it. So people not long on it, a lot of people is just trying to make a quick buck on this stock. And I don't blame you. I mean, the opportunity is there. You just don't want to get caught buying at the wrong time. Yeah, if you got an early seat, BBIG is fine. Meaning, if you got in yesterday around levels around $6.87, you are fine. Okay, if you was buying this thing last month on the 27th and you got an average cost in the $3, you are fine. Not try to average up to try to take this rocket up, guys. And if you're high up, I don't think this is the time to try to scalp in, run off with some gains today. Because in fact, tomorrow might bring a better buying opportunity. So if you play this thing on a red day, play it on a red day. A lot of people don't buy BBIG on a red day, but buy it on a green day. I never could get that or understand that from a lot of people. Like, you'll see a stock shoot down off 30%. Good fundamentals behind the stock. People don't want to buy it. People don't want to buy it on no drop. They're willing to buy it while it's up 20% and volumes coming in. They want to take that chance. If BBIG busts $10, like I was telling y'all, man, if this thing closes above that VWAP, which I'm pretty sure it's going to close above the VWAP, if this thing closes above the VWAP, BBIG is going to see some nice stuff, man. Can see some nice stuff. Talk about MMAT. My boy Alan Bell. Got you, Alan. MMAT. Now, yeah, we spoke on this stock plenty of times. Now, this stock probably was trending today. And see that jump here? It was on a climb towards right at the bell. And whenever we see a stock like this, okay, that's on a rise at the open, always react to the opening price in a selling manner. It never fails, guys. It never fails. So if you did take my advice and you have been applying that, you had the opportunity to buy it at today's lowest price. Okay. Now, MMAT, guys, we are currently sitting above the VWAP, but we have to take a look at this analysis before we can assert if this is buying pressure or not. Okay, and looking here, it is not buying pressure. Another thing is this stock has a huge market cap, okay, 1.53 billion. So it isn't a low market cap, small cap stock, but it does have a unusual amount of free float shares, okay, an unusual amount. Now, anyone that is buying this stock hoping on a short squeeze can forget it. The only way this thing is going to short squeeze, you need to see at least 200 million shares being bought and held. Okay, because you see that free float and them shares outstanding at these numbers. Let's check the institutional holdings to see how much sway is in here. Not too much sway holding us back either. So with only owning 6.87%, I don't see any institutions being very active in buying and trading this stock or selling this stock. Okay, only time they really do sell it is when they own a whole bunch of it, because they know when they sell it, it's going to have a cause and effect to it. Okay, guys, they can sell it, they can sell some of their gains, leave some in. They sell enough, it can spark a sell-off. Okay, it can spark a sell-off from the medium and small scale orders. Okay, they come in there with that large price drops. Now the retail investor and the whales believe this stock is over with. They believe that the institutions are dropping it. It's time to get out. The whole time that institution only locked in some gains, okay, because they own 80% of the free float shares. I mean, not free float shares outstanding. So anytime you come across a stock like that, guys, it can be a good thing and a bad thing. It's a good thing for the long-term perspective, but it can be a bad thing when it comes to anyone that is looking for a short-term swing, okay? Because they control all that. You own 90% of a company. Your buying and selling affects the stock way more than that 10% that's in the free float. Okay. So with that being said, this stock is looking good on that note. And the only time you really want to find a stock that doesn't have too much ownership is these high market cap stocks. Okay, if it's high market cap, ownership really isn't going to give you an indicator that you are in the right place. Okay, because a lot of these blue cap stocks doesn't have too many institutions in them. Okay, they tend to be around mid-level, sometimes small, taking advantage of those small caps. Okay, we're getting closer towards this close, guys. I'm going to seek you through the first 15 minutes of the aftermarket so we can check this selling and buying pressure of these stocks that we are talking about, because the aftermarket entry is a very key indicator on what's going to happen in the aftermarket. We tend to see most of those indicators, whether it's going to go up or down, the first 15 minutes of trading in the aftermarket hours. So with that being said, don't miss it, guys. Stick around. 15 minutes after the bell. BBIG, you know I got to get back to it. Now, if BBIG close at a spike, like for instance, not in a downtrend, if it closes at a spike, meaning a green candle, I don't care if it's 2% gain on that candle, that is what we call a key in the price, guys. We call that the key. And if that does close like that, this thing is going to see a major day throughout the pre and today's aftermarket hours. It's either going to see a huge spike right in the beginning of the pre-market, soon it opens tomorrow, or we're going to just start taking off right now. So keep your eyes out on that, depending on how it closes. If it closes at that spike and we see that the buying pressure is coming in on stock, free float, that free float is kind of high, but seeing that turnover rate, people are cashing. People are cashing, guys. Now, today is going to bring a lot of more eyes back on BBIG. So, round of applause. Okay, BBIG just got back in the discussion. Okay, so you're going to be seeing BBIG being talked about all over stock groups, the Discord, YouTube. There's going to be a lot of YouTubers talking about this again. Okay, you notice a lot of people don't talk about stocks during a downtrend that they have been speaking about. I don't understand that either, guys. A lot of YouTubers don't do that, but me personally, if I was telling you about BBIG and we woke up, BBIG was down 40%, you best believe I'm covering it. I'm covering that stock, guys, and we're going to get to the bottom of how this happened. Okay, I'm not going to leave you guys in the dark in any way, shape, fashion, or form. If I speak about a stock today and I tell you it's a buy, I'm buying some, and I don't speak about that stock for a whole week, I'm still holding it, guys. Anytime I sell a security, I let you guys know. Okay, I'll let you guys know. Anytime I'm planning on buying a stock, I'll let you guys know. So, in the stocks that I'm in, guys, I do not talk about very often. Okay, I might give a flash report. Sometimes we are all in the same stocks, of course, but I don't do. If I'm in a stock, I'm not going to be talking about it all day trying to get people to buy it. Because if it is a great stock, all the numbers do the talking, okay, guys? So, that being said, BBIG is still currently sitting 20% on the game. Now, let's take a brief look. Let me check out the comment sections, guys. Let's see what you guys. PT on OLB. Oh, I forgot about VIH too. Let me check out VIH, and I got you on OLB. Now, guys, again, VIH was just the talk of the town. Well, very recently, guys, this stock was just trending up. VIH was just the talk. I even told you guys this was a very good buy. Told you guys to grab this thing yesterday. It was an early seat. Okay. Now, taking into consideration, we are close towards that early seat. Now, if you did get yesterday's early seat in this stock, you are still up. Okay. In fact, if you got that early seat yesterday, you had an opportunity to sell this stock. But personally, guys, I wouldn't sell myself short. This is still an early seat. Okay. We look here at the last 3 days of trading, which is the last 3 days we do see this stock actually performing well. As you can see here, the average volume in this stock is only 806.51 thousand. Okay, today's volume has been 10,000,000.06 so far. Now, the free float is okay due to the fact that this stock just now started to move around, okay? But all in all, this stock has been killing short sellers. Okay, now a lot of shares have been borrowed, and they tend to borrow these things. If you look here, let's take a look. Most of the time, Webull does not have the short interest updated, but they have been killing it lately. Okay, looking here at the short interest. Now, a lot of people like to say they only have 2 or 3 days to cover the shares they borrowed, this, etc. Guys, in fact, let me give you a known fact. Hedge funds / short sellers do not have to return a share unless they can't afford to pay the estimated borrow fee. Okay, guys, in fact, not to get off point or nothing, like what AMC has going on, guys, the short interest in AMC, a lot of people were saying that they can't hold forever, etc., etc. But it's up to the borrower, really. And when the estimated borrow fee is high, the lender, is more likely to let the borrower hold the shares for how long they want. A lot of people don't know this, but the hedge funds, the people that the hedge funds borrowed the shares from, made more money off of AMC and GME rather than if they would have sold it themselves at its peak. Okay, if that makes any sense, guys. Okay, I'll say that again. The people that lended out the stocks were making much more money lending out the stocks than if they would have done selling it straight out for those high share prices. Now, the reason why they didn't do that, because these hedge funds are paying them every single day to hold these shares, just to hold them. Okay, so if AMC went all the way down to $0, it's not the lender's fault. He still made more money than he would have if he held the stock and sold it at $76. They were making so much money, guys. And this is why I get mad at the news a lot, because they don't give us both sides of the story. Y'all like to tell us how much money they lost, but you never told us how much money they made behind our backs. You never told us what we were really up against. Okay, guys? But let's get back to... No, I got to look at this one real quick. But looking here at the short interest, as you can see here, that is a lot. Okay, so from the 13th, 7 million shares, it took them to return 26 days to return 7 million shares. So let's go look at this on the day chart. I said the 13th. Okay, the shares were borrowed. We know the borrowing of shares do not affect the stock price. And a lot of people don't know this. Did you know if I borrow a share from the lender and I don't want to return the share, I can just buy it out flat out from the lender and it wouldn't affect the stock market? It wouldn't affect the share price at all. Not even a little bit. So, but don't worry, the hedge funds can't pull that stunt with AMC because they're so knee deep in shares that hasn't been returned. The freaking lenders don't even have enough for them. You know what I'm saying? So that being said, VIH does have a lot of days holding it. But as you can see, the reason why they held it so long, guys, is 13. Let me show it's 13. The reason why they held it so long, let's check this out, is because hedge funds hate stagnant trading, okay? They tend to return the share, or they tend to return the shares during a volatile day, whether it's up or down, okay? We do see them return shares when it's shoot up, okay? Not all of them, but I bet your bottom dollar, guys, that some hedge funds do return shares on these small spikes or dips. Okay, so with that being said, this stagnant trading is what made them hold the shares, because they don't see an opportunity to actually sell the shares at a lower cost. No, sell them at a higher cost and buy them back at a lower cost. They do not have that opportunity if it's trading sideways. Okay, so it's like if I loan you a share, like if I borrow something from this guy I borrowed 10 shares of AMC at $35. Okay, I come back to you and sell it for $40. It's up at $40 and you buy it from me at $40. Okay, bam. Now I return those shares and it's much lower than that, guys. The reason why these short sellers are okay with getting returned for instance, if I borrowed the shares from, let's say, Webull at $65 at AMC, and when I return the shares, the AMC shares isn't worth shit but $7. Okay, what is the result of that? Only worth $7 now. By it being only worth $7 now, the Webull that I borrowed the shares from wouldn't even mind if I bought the shares outright at that point. Not only that, they wouldn't mind, guys, because they made so much money off me borrowing the shares in the first place. They made more money off me borrowing it anyway, because I was paying a premium at this estimated borrow fee. So even though that the estimated borrow fee rate can be high, what these hedge funds tend to do when that thing is high, guys, and that is, when it's high, guys, they tend to pay for it. They just pay for it, guys. These are billionaires. I mean, they do have bull positions. All right, a lot of people don't understand that. Hedge funds do have bull positions. They only don't short stocks. In fact, I don't know if you guys were aware of this, but hedge funds have a pretty tight grip on Cara as far as their bull position. So do not let that get you guys confused. All right. Now looking at this close, let's check out BBIG, guys, really quick. BB baby, and I'm pretty sure above the VWAP. Yes, and we somewhat challenging it now. We went under it, okay, but I call this a challenge. We so close. Now, like I was telling you guys, close above the VWAP on this type of buying pressure. We will see this thing start to wake up, and I do see a green candle at the close. It's not a peak though, guys. It's not our key. But all in all, since it didn't shoot down right away, I can close this one up. If I was in the stock, I can close this one up and sleep good at night, because I know if it does go down in price, the momentum and potential is there for this thing to pick back up in the pre-market if we do see a small slight gain. But seeing that turnover rate, we closed at a decent high, 21% gain, tells me that people want to push this stock, period. If people didn't want to jump out around this area on a 20% gain, is a very key indicator that people want BBIG to go up in price. Now, the most efficient way to do that, I'm talking to everybody out there, guys, even if you're not on the live stream currently. If you really want to force a stock like BBIG into what we call a short squeeze, in order to do so, guys, you have to buy the shares at the cheapest price you can. Not at the highest. Because if you buy it at the highest, you're giving the hedge funds room to buy back those things at a cheaper price. That's not what we're here to do. We're not here to go back and forth with them every day, guys. Our goal is to get the lowest cost average on the day. That is the most effective way to push a stock in price, because if we're getting it at the cheapest of the day, guys, the hedge funds lose out totally. Okay, so if you're buying that thing at a high price, it's spiking up, you're chasing it, and 9 times out of 10, you just bought some shares from a hedge fund. Because when a stock is trending, they go borrow that pretty quick, because when it's trending, the volume is up. And high volume for a hedge fund is like honey for a bee. Okay, they sense that. That is what they hunt for. Okay, they probably wake up every morning, which stock is having seen the most value. So if you're in a play that doesn't see as much value, and suddenly it does out of nowhere, 9 times out of 10, you're going to be buying some short shares, guys. You're going to be buying some borrowed shares from someone. So with that being said, the early seat is the easy seat. Works in many ways, guys. Many ways, okay? I don't care if you're trying to average in. It works with everything, even short squeezes, even though I don't believe there is such thing as getting in early on a short squeeze, due to the fact that I can't just short squeeze a stock by myself. No one that is watching can short squeeze a stock by itself. Only major players can do that. Okay, very, very wealthy people. And the reason why we don't see it happen, let's take this stock for instance. We see that 60.48 million free float, right? Now, say somebody came in and bought it all. BBIG is going to instantly flash up to like around $60 to $70 in the flash of a second. Now, that is when you're going to see everyone that has bought the stock before you quickly exit. Okay, quickly exit, which is going to leave you as the world's biggest bag holder. That is why we don't see these companies forcing short squeeze on other companies. Okay, that is the true reason why you haven't saw Elon Musk come in and save the day for us at AMC and GME. True reason, because he will put himself in a tight spot. Okay, because if you buy out a company, it's free float completely. In this situation, in BBIG situation, I'll be director or something like that, board of directors or something, guys. I'll be a part of those group meetings. Anything that happens with the company, you got to run it by me. Okay, but yeah, though, guys, it's trading along the VWAP, which is a key indicator. This is something I rather see than to see it spike up during the aftermarket. Why? Because we know when a stock trends during the pre-market and aftermarket, the way that the market reacts to the opening price 9 times out of 10 is going to be in a selling manner. Now, guys, if you did miss BBIG, you might want to put that in your notes. If BBIG trends in this aftermarket or pre-market, you may be able to get you a very good dip price right at the bell. Not right at the bell, but the first 10 minutes within the bell, maybe even 15. Watch it pretty closely, guys. You're going to love it if you already haven't tried it, okay? I'm telling you, very efficient. Very, very efficient. Now, let's see. BBIG is going to rip tomorrow. Yeah. I mean, we got to check these. We can't just say it yet, because as of now, if it trades along this VWAP, then we can see a very good day during the trading day tomorrow. But if this thing starts to kick up, go back to Reddit. Who is Kush 8? My boy Kush. You don't know what you're talking about? My boy Kush is butthurt, guys. I guess he heard me talking about AMC, GME. Don't like it, but I love it, man. I love to get that type of reaction from people like that, because I know for a fact I'm right. Okay, if you told me anything about WTER, yeah, it's going to 90 cents, I wouldn't even reply to it. Why? Because it's crazy. It's crazy. He has disbelief in himself, guys. It's the truth. It's the truth. Like, go back and get on OLB. OLB is having a nice little run. Here we go. Now, we did break under the VWAP, but keep your eyes on it. Keep your eyes out on it. But we're going to take a look at, man, who? That's what I'm saying, Ryan. Who mans is this? Who mans is this? I think he's speaking about 8-5. Go back. My bad, Kush 8. My boy, I thought I was just a troll. Dude, I love how the TTM family comes for me, man. Anybody be talking crap, you guys get on it. I love the energy you guys bring, man. If it wasn't for you, where would I be? 400 subscribers. So with that being said, guys, I can't believe how yesterday's live video, you guys went so hard. The external views, which is people sharing the link, was phenomenal, guys. And that actually brought in a lot of subscribers. And a lot of people joined the TTM trading Discord off of that, guys. So keep doing your part, guys. I'm keep doing mine, man. Keep going hard. You guys know I work hard on these videos. Last night, guys, I swear to you, it's about 1 o'clock in the morning, and I'm literally going over what I was going to say about Cara today for about 2 hours, 3 o'clock in the morning. Okay, guys, so I do my best when I do it. But like I was telling you guys, our challenge, our 1K to a 100K challenge in 15 trades or less, is still in a good position. Why? Because the seat that we have, the stock that we are in has a massive amounts of institutional ownership. Okay, and this is a speculative type of stock, which is right up our alley with that amount of institutional ownership. Now, the reason why I say that is because a lot of institutional ownership on a stock like Cara that trades off of speculation. Well, it was trading off of speculation. Now, Cara, since we got the FDA approval, Cara isn't trading off speculation. Well, it is going to trade off a little bit. People going to be speculating the production announcement, but any stock that is trading off speculation and has a high ownership as far as institutions go, guys, that is a key indicator that you are in the right place. Why? Because those institutions are there long term. Okay, and that is the real reason why these, let me go back to it, guys. Let me go back to it. That is another reason why we saw here on this date in Cara this drawback, because these long-term shareholders, which is these institutional holders, by them actually locking in gains during this time, okay, they didn't sell everything. They only locked in a few gains, guys. By them selling during that time, that actually stopped us from shooting to the moon on the FDA approval. Now, if you're long on a stock, you do not want a moonshot, because that is going to hurt you in the long run. So when it comes to stocks like this, guys, they will put a stop on it. They will basically, cash in some of those gains, which will drop the price, especially when you own most of the shares. Okay, especially when you own most of the shares, guys. If you sell, let's say 20% of your position, this is the results of it. Okay, this is the results. And we know a FDA approval, man, the stocks that don't have a lot of institutional holders in it is the more riskier ones as far as betting on the stock, as far as these FDA approvals and those type of things, okay? Now, when you see a lot of institutional holders in it, it's a reason for that, right? Because they are more aware of the product, what's going on with the company. Not only that, guys, they are getting inside tips, believe it or not, okay? Because if we look here at IMPL, guys, IMPL saw the same type of thing after the FDA approval and saw a drop in price. But why, though? Do they have that large amount of institutional holdings? Heck yeah, they do. Heck yeah, they do, guys. 86.72% is owned by institutions. Now, hearing that FDA approval here, let's lock in some gains. Let's lock in some gains. We already have an average cost of $11. Let's lock in some gains, okay? And stop this moonshot, because we're long on the stock. We just got an FDA approval. We're trying to sit here. We're trying to sit comfortable in our easy seat without having a huge volatile market. And we want to sit here comfortably and wait and hear the revenue results on our new FDA approved product. That is what institutions wait for, guys. Okay, because if you do not know any type of stock like this, CARA, IMPL, it takes 12 years to get a FDA approval. For instance, if I want to start a drug or some type of medicine, guys, it will take at least from 12 years from today for me to get that FDA approval date. Okay, takes time, guys. A lot of people been in these stocks for quite some time, guys. So when this type of news come out, it's just the beginning. Let's lock in some gains. We've been here for a while. It's just the beginning, and we haven't seen nothing yet, guys. But I wanted to point this out. This is why I was saying the institutions know something, because on this day was the day they announced the date for their earnings call. Okay, now this sale, this big candle we see here, was institutional initiated. Okay, 200,000 shares being moved around. We know they own most of it, so 2,000 shares being moved around to drop this thing 25% is clearly them. Okay, now a week before hearing earnings, guys, the result was a downslide. And when earnings came out, it was a bad one. Okay? But the day that it actually came out, I have it highlighted here, wasn't even the biggest sell-off. Okay? So these institutions does have a lot of sway in the price, but their main goal is to get this. They want the price to go up, of course, but they have a lot of sway. So I want you guys to see what they are really doing. So if you do come into a situation like this, you're betting on a stock, FDA approval comes up, you see all these institutions in it, you know what to look for. You know what to look for. So by us having these early seats in these stocks, guys, if they did like this, for instance, if you would have got that early seat around here after the drop, you would still be holding on your shares. Okay. And these drawbacks after FDA approval dates is going to bounce back. IMPL is going to bounce back just like Cara is bouncing back. Okay. Now it's going to take some time. These aren't the most well-known stocks or tickers. Okay. But they are surefire, guys. Surefire. Now, AQST will slowly climb to $15 come December. AQST, y'all hear him? He is risen. It's telling you something, guys. AQST will slowly. Let's see what he's talking about. Because I think he has risen is. He said $15. Am I reading that wrong? $15. Let's look at the statistics really quick. Wow. I ain't gonna lie, man. He has risen. That is a steep call. $15. That is more than 3 times the price that we are at. So he has risen is telling us this is a huge early seed if it's right, that this stock is going to see 300% gain by December. And I thought I was a wild boy. Not even close. I mean, $15 is calling it pretty tough. Okay, we don't see too much volume in here. The free float is too close to the shares the outstanding shares. Turnover rate is perfect though. Okay, but $15, man, that's gonna have to be an institutional buy. Because let's see what they got going on as far as the institutions, guys. 43% is fairly high. 43% is fairly high, guys. But looking at that, 43% institutions holding this thing. So, I mean, anytime we see a large activity as far as the institutions, that is a long-term play. It is based on its fundamentals and balance sheets, financials, everything we hate to look at. It's based on. It's based on a 5-year forecast, really. That is what these big investors goes off of, a 5-year forecast. Especially when you're dealing with a biopharmaceutical, I just said that, biotech and pharmaceutical company. When you're dealing with those types, that comes into play a lot. But what we're going to look at here in AQST really quick. AQST closing under the VWAP, sign of selling pressure. Okay, but what is strange? If you see a stock just jump like this, first thing in the morning, soon the pre-market start, do not jump on it. Do not jump on it, guys. I want my subscribers to be the best traders, the best, know the most techniques, best strategies. I'm just not here just to make videos, guys. I want you guys to actually learn, bro. That is like my goal, okay? Just to instill these strategies, how to mask emotion, and just how to overall become a better trader, guys. I know we've been talking about a lot of volatile stocks, fast-moving stocks, major buy alerts, you name them, guys, stocks that fly the next day. But I want to start talking about long-term investments, guys. Long-term investments, early seats in those long-term investments, though, because that is more powerful than a lot of people think. Okay, for instance, if you were able to get Tesla around $5, okay, you could have sold at 50, but Tesla moves $5 just on a 1% jump, meaning your money is doubling off 1% movement. So with that being said, guys, Our goal is to find the next blue chip stock. Well, up and coming blue chip, it doesn't have to be a blue chip yet, but to find that next stock, the next Tesla. I wouldn't say the next Tesla as far as EV cars or anything like that, but the next overlooked stock that has everything going for itself. People laughed at Elon about the electric vehicle, okay? But look at him now. You know, guys, so I got a few plays, though, I wanted to put you guys up on. Okay, anybody that's in the e-commerce, anybody that deals with e-commerce, right? Amazon, this and that, Jumia, guys. Jumia. Okay, Jumia is, okay, now, Jumia shot up crazy in the past. Crazy, crazy, crazy. Now, Jumia is said to be the Amazon of the Middle East, Asia, okay? It's said to be that. Okay, they're trying to make e-commerce a thing over in Asia. Now, they don't have Amazon, but this company is dealing with Alibaba, okay? Now, by Jumia really being based for the Middle East and Northeast Africa, we know that geography doesn't have e-commerce, and basically Jumia is trying to be the monopoly of that over there. Okay, guys, now I know you're picturing Africa and like saying in your head, e-commerce in Africa, how is that going to work? But guys, it is working. They do have nice revenue coming in. If we look here, so let's take a look at this. Let me show you guys. Now, stocks like this, e-commerce, you just don't buy off the chart. Stuff like this trades off its fundamentals, its balance sheet, its forecasts, its EPSs, sales, everything. Earnings matter a lot for a stock that deals with e-commerce. Okay, now let's look at the order flow distribution, and then we check out that. But we do see some overall, I got to call this selling pressure. Even though we see that inflow outpacing the outflow, guys, that gap on that large, okay, is telling us selling pressure. Okay, doesn't mean this thing isn't a buy, but this selling pressure could have came about towards the end of the day as we see this. Wow, that's interesting. As we see this green candle come in, only 89,000 shares, not too much of a gain either, being less than 1% gain. So a lot of that was selling as well on that green candle. But since that green candle, this thing actually closed on a downfall. Okay, now we see selling pressure on it. We're currently above VWAP. Now, if we take a look here at these key indicators, the key indicators is telling us here in Jumia that volume has gotten low since March era. But looking here at the 52-week high, guys, man, 69.89, and this thing didn't just shoot up in the moon off some short squeeze hopes, and it's done, guys. This thing had graduate gain. I mean, this thing was, it's the only e-commerce place in that region, guys. Now, even though $20 is quite steep for a 52-week low type of stock, okay, I do think this is a time to be grabbing some Jumia shares. Okay, guys, this is more of a long-term play because this thing is going to be big. Okay, I'm not saying Alibaba big and sure not Amazon big, but a player like this in the field that it's in, being the only one in the region, $100 stock easy. $100 stock easy, but we're talking long-term, guys. So when we speak long-term plays, we are talking at least a year and a day from now. But I know a lot of you guys are loving these quick gains that we are getting. But guys, the backbone to a healthy portfolio is to build a foundation with long-term investments, okay? Because over time, you're going to look back at that and say, man, these two long-term investments outdone everything I did in the last 10 years, and I forgot about it. Like Warren Buffett said, man, when it comes to long-term investments, you only have to be right just once, okay? But when we're dealing with these day trades, swing trades, guys, we can't afford to be wrong, okay? So with that being said, man, I'm going to wrap this one up, guys. I hope you guys enjoyed this live stream, and do not miss the Wallstreetbets rundown and Wednesday's expectations, guys. You guys have a good one.